Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello and welcome to another edition of the Zach's Friday Finish Line. As always, I am Ryan McQueeney, an associate stock strategist here at Zach's, along with one of our editors, Maddy Johnson.
Spicing it up today.
Yeah, I've not said that intro enough times to have it down, clearly.
Today is Friday, August 24th, and we're here to recap this week's biggest stories from the investment and financial world. A lot of noise coming out of Washington this week. It was a big week. It was exciting.
You could say that, yeah.
So the legal situations of Trump associates Paul Manafort and Michael Cohen resulted in guilty verdicts and pleas, respectively.
Yeah, within like 20 minutes of each other. It was Wednesday afternoon or Tuesday afternoon, and all just came
I had
down.
CNBC open in my browser, and they're breaking.
Yeah, the scroll at the top.
The red one kept like changing, it was like nervously changing. I was like, oh my God, I can't keep up with it all.
Definitely, that was Tuesday afternoon, I think, right? Mm-hmm. So yeah, that was a busy day, but markets shrugged aside the president's slightly higher chances of being impeached and instead opted to celebrate our record-breaking bull market and continued strength of the domestic economy, which was evidenced by another week of lower than expected initial jobless claims.
Yeah, great performance by the S&P. We also had another week of full retail earnings reports, and even one Chinese tech behemoth joining the mix, which we will get to later in this episode. But first, Ryan is going to fill us in on a dangerous new competitor for a popular friend of millennials app.
Yeah. So on Tuesday, JPMorgan unveiled a new mobile application which will feature free trading called UInvest. The platform is offering a portfolio building tool, no fee access to the bank's stock research, and at least 100 free stock and ETF trades in the first year. And Chase private clients will also get unlimited free trades in the application. CNBC said that this app has been more than 2 years in the making, and it really escalates an ongoing price war in the retail investing industry, which has seen costs to buy and sell stocks fall significantly over the past couple of years. And that battle has been largely inspired by the explosive growth of Robinhood, a fee-free trading app with at least 5 million users right now. Maddy, that is the millennial favored mobile app that you were hinting at. And
it gives to the poor and steals from the rich.
I think that's where they got the name of it, yeah. Robinhood's monumental growth in just a few years has certainly disrupted the industry, as the fairy tale Robinhood did in whatever forest he was a part of.
Oh, what is the name? Oh, my God.
This is bad.
This is so
Sherwood
bad.
Is it the Sherwood Forest? No, that's a different forest.
No,
that's a different fantastical forest.
Anyways.
He was a disruptive fellow, that
Yeah.
Robinhood. And Robinhood, the app, has been disruptive for the retail investing industry. But just when Robinhood was sitting at the top of the free trading throne, JPMorgan is set to enter the business with a huge market share advantage, as when they flip the switch on it, it's the Sherwood Forest. Yeah, I got it right. I'm glad. We looked it up. But so JPMorgan's new UInvest is launching next week, and it's basically just going to be a switch flip with the bank's existing app. So basically, with one update, 47 million people will have access to UInvest. Obviously, that doesn't mean all 47 million people are going to use it, but certainly an advantage over Robinhood basically immediately. And then also feeling a bit of volatility, a bit of headline volatility on the news earlier this week were brokerage firms like E-Trade and TD Ameritrade. This is kind of their wheelhouse, this budget, digital buying and selling. Even like Charles Schwab, which is more of a traditional brokerage that has online options as well. These low-cost trading services, they felt a bit of volatility on this news. Although I did want to note that places like E-Trade and TD Ameritrade, at least 1/3 of trades on those platforms are derivatives, options trades, which are going to require more complex platforms. So Robinhood doesn't really unleash the world of derivatives. There are options on there now, And from what I understand about JPMorgan, that this is just stock and ETF trades, so no options there. So not completely killing the traditional brokerage industry, although I would say I would expect E-Trade and TD Ameritrade to have to respond to this with lower trading or maybe even some form of free trading themselves. So definitely a lot of disruption in the retail investing industry, which is really good news for the listeners of this podcast who presumably have one of these platforms or probably use something like this. So certainly getting a little bit cheaper to do that. And with that, we'll move into earnings reports. Maddie, start us off with Urban Outfitters.
Yes, Urban Outfitters. I recently went into an Urban Outfitters to shop for an outfit for Lollapalooza because I was like, what are the kids wearing these days? Well, I better go to Urban Outfitters. I was the oldest person in Urban Outfitters, apart from the people actually working in the store.
Yeah. You get something nice?
Well, I ended up buying like 5 different things because I could not decide.
Oh, that's where they get you.
And I didn't want to try anything on, but then I ended up returning everything I did not wear. Anyways, Urban Outfitters, my favorite store of like the company is probably Anthropologie, but having a great run.
Yeah.
First of all,
good year.
It's one of the better performing retail stocks, specialty retailers, and they delivered better than expected results this week for their 5th straight quarter. So the lifestyle apparel retailer recorded earnings of 84 cents per share, and this topped estimates by 8 cents. That bottom line result was also a sharp increase from the 44 cents per share witnessed just last year. Meanwhile, net sales of $992.5 million outpaced the Zacks consensus estimate of $977 million, and sales were up 13.7% year over year. Let's see. The company witnessed robust performance at its Urban Outfitters, Anthropologie Group, and Free People brands. And remember, Free People is just crushing it.
Yeah.
And this is like their hippie, like free love, I'm a wanderer, like brand.
Well, you can see it's right there in the name, Free People. So how could you? Of course.
But I'm just saying.
No, I'm saying it's
but their clothes are just
on
like
the nose with what they're trying to do.
But then again, it's like one of their most expensive brands. So everything at Anthropologie is like pretty expensive, but Free People, like clothes, like at minimum $75.
Is it just men or is it just women?
Women's.
Just women? That's what I meant to
At
say.
this point.
Okay.
Yeah.
I'd be interested in a Free People men if they're listening.
They could, yeah. They have like, and it's like expanded into like lingerie and athleisure, but it used to be just like your basic like tops and bottoms, but it's like very
What's
expensive.
an Anthropologie? I've never been in an Anthropologie.
Oh my God,
I know.
Ryan,
I love
to go into an
I love an Urban
Anthropologie.
Outfitters.
There's no men's stuff at Anthropologie,
Oh, okay,
so it's
so I
just
don't need to
women's.
go into
But
that.
they have a really good home section.
A home section.
A home section. But
Okay,
so does
maybe I
Urban
do.
Outfitters, but
Yeah.
they call it their apartment section.
Right.
It's for
Well,
young.
I live in an apartment, so
It's for young people.
that could be right. They sell like vinyl records and stuff at Urban Outfitters.
They
I
do.
love
It's
it.
great.
Yeah, it's very fun.
Yeah, their stores are getting really good because their apartment section is expanding.
Yeah.
But yeah, Anthropologie is their catalogs. If I don't know if your mom or any of you
They have like printed catalogs?
yeah,
Like
and they're
with
gorgeous.
Paper?
with
They're made out of
paper.
paper?
Yeah,
Wow. I didn't know that was
I
still
know.
a thing.
but their home section at Anthro is one of the best.
Okay.
Yeah.
I'll have to go in there. But
Oh,
Free
yeah.
People, not for me yet.
Well, I mean, if you need a gift,
Yeah. Okay. All
yeah.
right. I'll keep
There's
it
a
in
really
mind.
good store, there are a Free People store up in Southport here in Chicago.
Yeah, no, I know right where it is. Yeah, and then I just was like, "That's not a store for me." So,
But yeah, Free People, one of the better performing brands, and Urban Outfitters and Anthropologie made a huge comeback this quarter. So respectively, total comps were up 13%, with same-store sales hitting double-digit percentage growth at each of those brands. In fact, comps growth touched 17% at Free People. It's crazy.
absurd. Yeah,
11% at Anthro and 15% at Urban, but softer year-over-year comparison. So like last year wasn't great, especially at Urban and Anthro. So this like huge double-digit comparison, you have to like take that into account.
yeah.
But management hinted that based on current sales trends, it anticipates third quarter sales comps to grow in the high single digits. So next quarter, we'll probably see a little bit of a balancing out, excuse me. But Urban, really good performance, one of the better performing retailers, like I said, and people are shopping. And you can tell that when a retailer is on trend, the numbers are there.
I was just going to say it's very trendy right now, and it
Yeah.
feels like we've seen a lot of, varied success, but it seems like you can find the success in these specialty retailers so long as they have a niche that's in right now.
And they have they just recently rolled out this online payment system called Afterpay on their website. So it's a version of layaway.
Right. It's like an online payment plan.
It's an online payment plan. It's in 4 installments. I actually used it at Urban Outfitters recently. So if, like, let's say at Anthropologie, you see a dress that is typically $175. You're like, ooh, man, I don't really want to pay $175 right off the bat.
Not for a dress. No, I'd never do that.
So you do Afterpay. They do like a minor credit check, right? So they have to make sure that like you actually can pay the $175.
That makes sense, yeah.
Over like 4 installments, and that like that money is going to be in your account every 2 weeks. And then every 2 weeks they take like whatever money it divides it up out of your account. I think it's usually your checking account through your debit card, and you don't have to like, and you get, the product is shipped to you right away, so you don't have to like wait for it. But it's really cool. So I don't know if it's at Free People. The last time I checked, it wasn't, but I'm assuming it will be eventually. Got
it. All right, so we're gonna go from these smaller specialty retailers, and we're just gonna click and drag and expand and make it bigger. And we're gonna go to a big box retailer that is Target. Yes, over at Target, adjusted earnings of $1.47 per share came ahead of the Zacks consensus estimate by 7 cents. And was up nearly 20% year over year. The company generated total revenue of $17.8 billion. That was also ahead of the Zacks consensus estimate of $17.3 billion. That was the 6th straight quarter of better than expected revenue, and that also marked growth of nearly 7% from the year ago quarter. Comps for the quarter increased 6.5%, compared with 1.3% growth in the year ago period. So, back to back, you love it when it's comps growth on top of comps growth. We talked about the softer year over year comparison at Urban. Not the case here with Target. Number of transactions rose 6.4%. Average transaction amount jumped just 0.1%. So the story there is the number of transactions, which means they're getting people in the stores. People are shopping in the Targets. We'll get to why in a second, but wanted to touch on digital comps. Also soared 41%, and pretty robust, pretty healthy guidance from Target projects adjusted earnings in the range of $1 to $1.20 per share for the third quarter, and that compares to 90 cents reported in last year's third quarter. And as I hinted at, people are going into the Targets. They love the Targets. They're shopping. Number of transactions up 6.4%. Why is that? Well, as we've talked about on the show before, Target has really focused on redesigning its stores. It's also opened smaller stores in college towns and urban areas, and it has improved its pricing strategy to become more competitive. It's also shuttered some underperforming lines, introduced new lines and products, and then updated its digital strategy and supply chain. Just a really smart modernization plan from Target, a facelift, if you will, across all their stores, and doing a lot of really interesting stuff on the corporate end and the back end. And it's paying off with people getting in there and they're shopping and they're loving Target again.
Yeah,
so that's
especially
good.
in their home section. So if you go into like the really big Target stores, you'll notice. So if you want like a pillow or a lamp, you'll go in and you'll find like shop in shops that display like their specific brands, like Chip and Joanna Gaines. Like I think it's like called Home and Hearth. It's like basically like this like
that's one of the new ones.
This like frame. This like house frame that like they've built, and it just like displays like all of the line's like product. And you go like a little bit farther down, and it's like another line that's like another little shop in shop. So it really like Target has done a really good job of displaying like new product lines.
Yeah.
And you can say the same for like the new kids, like the kids lines as well.
I was just gonna say I actually can give a little expertise on this. They have like completely turned over their men's section and stopped. They closed down, shuttered canceled some of their men's in-house lines and launched new ones. So I don't shop for clothes a ton at Target, but definitely to the point where I would recognize and knew the old brands, and then they did away with them, and now they've got new stuff. And as you said, the home goods line with the TLC people or the HGTV people, that's one of the new ones too. Yeah. So they definitely have been rolling out a bunch of new.
Yeah, and I don't know if you buy wine at Target.
Yeah.
But
been there.
Yes, they do have a really good wine selection. Yeah. But they've also like done this like it's like kind of cool, but like it's, you know, whatever, it's just wine. But they put like they just like have a better wine like display, right? So they have like these like kind of like corny like wine like crates where they've like propped up and
that's authentic.
It is like authentic, right? They put like
how they do it at the
like
vineyards.
Like that grass, and they like to put like the wine bottles in there. So you're like, oh, okay. And the wine's like only $10 a bottle.
Yes,
you're like, okay,
made.
In my cart now. It's just like it just looks better.
Yeah. And that's really the everything looks better is the idea. Maybe some less so. You're not going to get the authentic vineyard experience everywhere. But definitely, as I described it, a facelift. That sometimes has a negative connotation, but I mean it in a good way. So, all right. So that's the retail earnings we wanted to go over. Pretty good week of retail earnings. And then next week will be kind of the last busy week.
We have
Ulta next week. So that's always one of the sector's more popular ones. A non-retail earning, well, I guess kind of retail, tangentially, in some ways. New retail, if you will. That's how they would say it. We had Chinese tech behemoth Alibaba reporting this week. So
Alibaba, revenues at the Chinese e-commerce giant skyrocketed 61% to hit $12.23 billion. Meanwhile, the company's adjusted quarterly earnings, those climbed to $1.22 per share. But earnings fell short of our Zacks consensus estimate that called for $1.29 per share. Interestingly, though, Alibaba's net income attributable to shareholders plummeted 41% to $1.31 billion. The firm noted that this decline was driven by a one-off stock compensation from the reevaluation of its affiliate Ant Financial Services Group. Alibaba also noted that it will merge its recently acquired food delivery firm, LA.May. I hope I'm pronouncing that right.
I actually, not to call you out on it, I think it's like not even close to how you pronounce it.
It's probably not.
I asked Afri, who our listeners might have read some of his stuff or heard him on the show at some point or one of Tracy's shows. He's one of our interns and he spent a lot of time in China. And I was like,
he spent a year.
Hey, how do you say this? And he was like, said two sounds. And I was like, that is not. I'm just going to spell it out loud. Because I said that on my free lunch show a couple weeks ago. And I was like, I was just told how to pronounce this and I still can't do it. So I'm just
I'm going to say it.
Yeah.
So I'm just going to spell it. So ELE.ME.
But it's capitalized ELE and then it's dot.
Okay, capital E. Okay, let's stop calling me out on this.
It's a stylized thing.
With Kubei, which is similar to Yelp, the new unit is set to receive a $3 billion investment led by Alibaba and SoftBank. Mm-hmm. Investors will also be pleased to note that its growing cloud computing business saw its revenue skyrocket 93% to hit $710 million. Baba's big quarterly gain should help it climb up the list of the world's largest cloud computing firms. And this boasts about 4% of the total global market share. Also, Alibaba's digital media and entertainment revenues soared 46% to $903 million this quarter. This growing unit includes its video streaming platform, Youku, probably pronounced that wrong as well as its music streaming service, Xiaomi.
That one you got right, for sure. But those
Thanks,
I don't want to do the American comparisons to everything, but I'm going to do it everywhere. Anyway, the Kubei that you talked about is the Chinese Yelp. And then the Youku is almost the Chinese YouTube, and then the music streaming platform is kind of the Chinese Spotify. They're doing a lot of stuff. As I mentioned, the new retail plan, that's the food delivery, and they also own a bunch of brick and mortar grocery stores now.
Yeah.
And as you mentioned, now at least 4% of the total global market share in the cloud computing business, knocking on the door a little bit of the Microsofts and the Amazons and the Googles of the world. Still a long way to go and kind of competing in a different market than those companies are. But all of a sudden, this e-commerce company is now doing a little bit of everything. And that, of course, reminds us a lot of Amazon doing a little bit of everything. We'll see how successfully both of those companies go at their doing a little bit of everything attempts. Obviously, we've dug into that a lot on the show as to who can pull it off and whether they will be able to successfully.
Yeah.
Alibaba also had some interesting things to say about the U.S.-China trade war in the conference call. My favorite comment, I might not get the quote exactly right, but the tone was, the world is a big place. And they said, we don't want a trade war with the U.S., but if we have to look elsewhere, if we have to ignore the United States, then we're more than willing to do that. So I thought that was interesting as well, because it seems like as these talks go on, people might just say, we don't need you anymore. So Alibaba, interesting report, interesting comments from them. Interesting week. I don't know where we're going to go with this Trump legal stuff. I don't know where we're going to go with the Fed stuff. We should hear from Jay Powell later today. And the Chinese in the U.S. are talking again after a long heated breakup. They've picked the phones back up and they're now texting, and they're getting over it. So we have all those stories. We'll keep an eye on all those stories as time goes on. That does it for us this week, though. As always, if you felt that we missed something, or if you want us to cover a different story, shoot us an email at podcast@zacks.com. You can also check out all of our other exclusive audio content at zacks.com/podcasts. Remember to subscribe and leave us a rating on Apple Podcasts. We are also now available on Spotify if you prefer to get your podcasts there. Say podcasts enough time at the end that it starts to lose meaning to me. I don't know what that word means anymore. But thank you again for joining us, and we will see you next time on the Zacks Friday Finish Line.